Bajaj Finserv Limited conference call, hosted by JM Financial Institutional Securities Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now have
and Mr. Ankur Anil Kanwar, CFO Designate, Bajaj Finserv Insurance Company Limited. With that, I would like to hand over the floor to Mr. Srinivasan for his opening comments. Over to you, sir. Thank you.
Thank you, Samir, and good morning, everybody. I welcome everyone to the conference call to discuss the results of Bajaj Finserv Limited for the third quarter ended 31st December 2024. That is Q3 of FY25. Let me first welcome Ankur Kanwar, who is taking over as CFO of Bajaj Allianz General Insurance Company from tomorrow. He has been with us for over 6 months as a CFO Designate, and he will officially take over as CFO tomorrow. I would also, you must have seen from the release yesterday that I will be handing over the reins of the CFO position to Ramandeep from 1st February. Ramandeep is a familiar face to all of you. He has been part of this call for several years. I will continue to be in a leadership role in BFS as President Insurance and Special Projects. I would like to thank all of you who have participated in the quarterly calls, which I have moderated for the last several years, for the support, encouragement, and valuable queries that has kept us on our toes. And my congratulations to Raman for the CFO position. So I request you to join me in wishing Ankur and Raman all success in their new assignments. As before in this call, we will largely be concentrating on the consolidated results as well as the results of our insurance operations through Bajaj and BALIC, and where material the standalone results of our company, BFS. Bajaj Finance has already had a conference call on 30th. However, if there are any high-level questions on BFL, we would be glad to take that as well. To start with, in regarding to the announcement by Allianz that of their intention to exit from the JV agreement, and all the discussions are still at a preliminary stage and not yet finalized. Therefore, we will not be taking any queries on this during the call. Any statements that may look like forward-looking statements are just estimates and do not constitute an assurance or indication of any future performance result. And as before, you are aware that as required by regulation, while BFS prepares its consolidated financials in compliance with Ind AS, the insurance companies are not yet covered under Ind AS. They have prepared Ind AS financials only for the purpose of consolidation. Accordingly, for Bajaj and BALIC, the standalone numbers reported are based on non-Ind AS accounting standards as applicable to insurance companies. Our results, the press release accompanying the results and our investor deck has been uploaded on our website within yesterday. I would like to draw your attention to the newly revamped investor deck with more disclosures which we started from the previous quarter. We do hope you appreciate this and look forward to your feedback. Let me now move on to the highlights for Q3 FY25. Our consolidated total income was up 10% at 32,042 crores, and the consolidated profit after tax showed a 3% increase at 2,231 crores as against 2,158 crores in the same quarter of the previous year. However, under the Ind AS, the insurance subsidiaries have chosen to hold a large part of the equity securities portfolio as fair value through profit and loss account, and also a certain amount as fair value to other comprehensive income. Therefore, the growth of the profit after tax, excluding the unrealized mark-to-market gain and loss, and including the realized equity gains booked under OCI for the quarter was 23%, and for the 9 months was 13% over the same periods of the previous year. So overall, the core operating result of our company, we believe, has been very satisfactory for the quarter. During the quarter, Bajaj recorded top-line growth of 46%. However, if we were to exclude the volatile crop and government health, and also the impact of the 1/n, which is a new accounting methodology that was implemented because of IRDA's regulations, the growth would have been 6%. Previously, all long-term policies, which include certain types of health policies, some long-term dwelling policies, and certain other types of policies that Bajaj used to write, were accounted as premium on assumption of the risk. However, from this quarter, as per regulation, these premiums, gross premiums, are to be deferred over the life of the policy. There will be an impact on top line because of this. There may also be an impact on net return premium and the ratios such as combined ratios. But in terms of the underwriting result and profit after tax, this is profit neutral. For the quarter, Bajaj recorded a profit after tax increase of 39% at 400 crores versus 287 crores. And the ROE is 14%, not annualized, versus 11.1%. The combined ratio, 101.1% versus 102.9%. Overall, I think Bajaj's combined ratio performance continues to be satisfactory, and the profit growth is also quite strong. Bajaj recorded a top-line growth in terms of individual rated new business premium was quite muted in the quarter, mainly because of the change in the product mix and the change in the distribution arrangements that the company is making on account of the new surrender regulations. The company is focusing now on creating a sustainable product mix over the years, and if there are any questions on that, the Bajaj team will be, Tarun and Vipin will be pleased to handle that. Overall, the gross premium, return premium increased by 16% at 6,361 crores. The profit after tax was higher by 106% at 222 crores versus 108 crores, which was also aided by a tax reversal of about 60 odd crores. But even excluding that, there has been a healthy increase in profit after tax. The new business value, which is the metric for life insurance, increased by 1% from 251 crores to 254 crores, reflecting the efforts to adjust the product mix as well as the impact of the new surrender charges which kicked in from 1st October of this year. BFR had a very good quarter this time. The consolidated net income was up 26% at 11,673 crores. And the consolidated profit after tax was up 4,300 crores with an ROE of 19.08%. Given the general muted performance by the lending sector across banks and NBFCs, this result is very, very healthy. Now coming to Bajaj, the growth for the general insurance industry during the quarter is 7.3%, with private sector growing at 5% and public sector at 11%. The growth has increased slightly from the previous quarter, largely driven by the public sector players. I already mentioned about the 1/n regulation, which is causing a bit of distortion in apples-to-apples comparison. So as we go forward, we'll continue to call that out for at least another couple of quarters. The gross premium for Bajaj grew 46% and 6% excluding tender-driven crop business and the 1/n basis impact. The combined ratio already mentioned. The underwriting loss is again something which we're talking about at 43 crores was an underwriting loss of 85 crores in the previous quarter. And if you see the industry as a whole continues to bleed heavily in 4 and 5 figures for the whole year. The investment income and other income for Q3 FY25 increased 23% to 577 crores. And the AUM as on 31st December stood at 32,633 crores, which is an increase of 8%. This is after paying a fairly healthy dividend of 662 crores for FY24. So the company continues to generate good float, and this augurs well for the future as well. So our objective in Bajaj again will continue to grow top line on the segments that we prefer, continue to focus on maintaining a good quality insurance book with a combined ratio which is better than market, with superior risk selection, balanced business mix, and balancing profitability and growth at all times. On the customer front, Bajaj relentlessly drives the theme of caring the viewers, and we continue to remain focused on customer obsession. And in the investor deck, you'll find several metrics related to NPS as well as our digital initiatives for improving customer experience. In a market which is intensely price competitive, we believe this displays Bajaj's commitment to a balanced and profitable growth on the back of broad distribution and prudent underwriting while focusing on best-in-class service. Again, a solid result from Bajaj in terms of strong profitability and with a growth better than industry. And as usual, we will again reiterate that this is a long-term business, and a single quarter result, because of the volatility in claims, cannot be taken as an indicator of the future. So we continue to remain focused as long-term investors in this business and long-term value creation for shareholders. Moving to Bajaj, the overall growth in IRNB was less than the industry, and the muted growth can be attributed to recalibration of business, what we call Bajaj version 2, which started last year but has actually undergone some changes due to the surrender charges. We focus on profitability. Our retail protection continues to grow strongly, 96% growth. We have also have higher share of ULIPs. Within the ULIPs, a significantly higher share of ULIPs, which have a higher margin with a higher protection and rider attachments. We have made some changes on product regulations in line with what some other major competitors are doing as well. This includes a variety of actions which Tarun and Vipin will explain if at all anybody has a question on those. And we have to see, in terms of group credit life protection business, there is a temporary lull because of the pressures on lending by the banking and NBFC sectors. The renewal performance continues to be strong. Bajaj's renewal premium grew 24%, resulting in GWP growth of 16%. And we are also heartened to see the number of new policies for Bajaj growing by 13% to 5.5 lakhs in the 9 months of FY25. The NBV growth, due to the higher proportion of lower margin unit-linked business, which we are consciously trying to bring down, was muted this quarter, which also had the effect of surrender charges on the new non-par savings and fixed products that we sold in the quarter. The retail protection for 9 months growth was also strong at 54%, and we ended 9 months at 264 crores of retail protection business. And for the quarter, as I mentioned earlier, it was more than 100% at 108 crores. We continue to be focused on data-led decision-making. Significant investments are being made on data and analytics through our direct sales, through upsells and cross-sell initiatives. We now have a presence of in 330 cities for our proprietary sales channels. And on the institutional business side, we continue to expand our network of partners and grow business with the newer partners we have acquired over the last 2-3 years. Bajaj ended the quarter with an AUM of 1,22,000 crores. Overall, while there have been pressures on top line, it is also the start of a multi-year journey of improved profitability for Bajaj. Again, both the insurance companies are among the most solvent in the industry, with solvency in excess of 300% for both. In terms of BFL and BHFL, since they both are listed and have had their calls, I would just briefly touch upon the results, a good quarter on volume, AUM, OPEX. Loan losses seem to have stabilized, and I think you will get better flavor from the investor call that Rajiv had. And the company is committed to bringing down the loan losses in the next year. The ROA was steady at around 4.5%. The company booked the highest ever new loans of 12 million, adding 5.3 million new customers in the quarter. And during the quarter in November, we also announced BFS 3.0, a FinAI company, the details of which are available on our website. Strong growth on customer franchise and AUM growth. In terms of Bajaj Housing Finance, the 100% mortgage subsidiary of BFL, it continues to do well in a market where, housing finance companies are always under pressure for margins. They have recorded a 25% increase in profit growth, a 26% increase in AUM, both solid results. The capital adequacy ratio is very strong post the IPO at 27.86%. And GNPA and NPA continue to be very low at 0.29% and 0.13% respectively. Overall, for the lending businesses, BFL and BHFL are very strong quarter. Update on our platform companies. Bajaj Finserv Health. The numbers for the previous year are not comparable because of the acquisition of Vidal Healthcare, and which is included in the results for the current year. In Q3 FY25, Bajaj Finserv Health carried out approximately 2.3 million health transactions. The provider network continues to expand. It now includes 86,000 doctors, 4,000 lab touch points, and 15,000 hospitals. However, going forward, the focus will be a lot more on the payer network, which includes insurance companies, governments, and employers. Bajaj Markets attracted 8.2 million customers on its digital platform, out of which approximately 0.98 lakh consumers became customers. The disbursement for the quarter stood at a little under 2,000 crores, and it shows 58,000 cards in the period. The major achievement for BFS Direct in this quarter, the marketplace business, is that the loss for the quarter is just 3 crores, and we are seeing very clear visibility on cash break-even for the marketplace business of Bajaj Finserv Markets. Bajaj Finserv Asset Management, notwithstanding the volatility in the markets, ended with an AUM of 17,433 crores, which is about 8% higher than September 2024. And during the quarter, they launched 2 funds, recording an AUM of 818 crores. The non-group share of AUM is 86% to 93% in Q3 FY25, increased from 86% to 93%. And they are not, the dependence on the group for liquid funds is reduced substantially. Before we open for questions, considering the paucity of time, I would request the audience to keep so that we can cover more queries during the call. With this, I invite the question from the audience, and over to you, Sunil.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mehak from MK Global. Please go ahead.
Yeah, hi. Thank you for the opportunity, and first of all, congratulations to Ramandeep sir. My first question would be regarding Bajaj. So just wanted to know what has driven the increase in the loss ratios for the motor TP segment, and if you could give us any color on the reserving experience. Secondly, the question would be on the retail health side. So IRDAI had kind of published a circular capping the price hikes in the health products to 10% for senior citizens. So just wanted to know your comments on how this impacts your business and overall how you look at for the industry as well. And my third question would be for BALIC. So if you could just give us some more details on how you have kind of changed the product mix strategy post the implementation of the new surrender regulations. That would be from my side.
Yeah, Tapan, would you like to take the first two questions and then Tarun?
I think let me answer the health part, and the loss ratio I'll ask Raman to take that one on the TP part, but I will try and know. See, on the health, the regulation on senior citizen capping of 10% growth, we welcome the regulations on that basis, because if you look at the principle of insurance, it is to take care of societal need which is there. That's how insurance industry got created. Now, on a senior citizen basis, if the price goes up substantially, it becomes unviable for them to insure, and they get left out in this basis. The way insurance operates is that you collect money from many to pay to a few. And that is why when the regulator says senior citizen, they give you an option that you can do price correction at all levels so that your overall portfolio looks good. That is how the balancing has to happen. So it is not that if they do senior citizen, then you are stuck there, because you have a cohort of book, and then looking at your loss ratio, you put that. To look at the circular carefully, it also states that the insurance industry should collectively look at negotiation rates of the hospital. It's a very balanced circular, which is very customer focused in perspective of the senior citizen. So I think it will be good for the industry, and the industry will balance pricing in a way that the senior citizens don't get marginalized and left out from the benefit of the insurance and the world there. So that is the point of the circular, if you look at it in totality. Coming to the TP reserves, and if you look at the reserves, I've said this in the earlier calls also, the best way to look at is that what are the release which happens from a company perspective in terms of what was reserves and the claim settlement ratio. Bajaj always had a very positive release in terms of the reserving and the settlement. The delta has always been very positive on that basis. And the correction keeps on happening as we progress. So at no point of time will you have seen in 23 years of Bajaj that there would be a situation in which the reserving was less than the claim settlement. So it has always been adequately reserved, and it has always been done well. Now, I'll hand over to Raman if he wants to add something to this.
Yeah. Hi, Mahek. So Mahek, if you recall Srini's comment in the opening speech itself, which said that ideally from a GI perspective, we should not look at quarterly loss ratios. What the right measure is to look at on a longer term basis. So if you look at some aberrations which are there in the quarter, essentially come because there is a lag between reported claims and when the IBNR gets adjusted by the actuary. And hence, we often make this comment. But if you look at on a 9-month basis, our actual loss ratios are lower than what it was in 9 months last year. It's actually down from 79.5% to 77%. So it's just the aberration of the quarter which gets settled in the subsequent quarters.
Okay, thanks. And lastly on the BALIC.
Yeah. So on the product mix strategy, that is a very specific question you asked. What we've done is, unlike the rest of the sector, which has changed largely the traditional plans only, we've gone ahead and relooked at the entire product mix. We looked at the entire product structures that we have. So it's not just about the mix. It's about the structure for each product that we had. And we've gone ahead and changed practically all our products, including ULIP, PAR, and non-PAR. As a result, what we've started doing in ULIPs is a significant percentage of our ULIPs now are with inbuilt riders and higher protection. That is a significant change that we've brought in. And of course, the traditional plans changes have been significant as well. In terms of, if I look at Q1, Q2, Q3, we've also brought down our product mix in ULIP because while the rest of the sector has actually taken it up, which to an extent also contributes to our muted growth.
Got it, sir. Thank you so much.
Thank you. The next question is from the line of Madhukar Lahadi from Nuvama Wealth Management Limited. Please go ahead.
Hi, morning. Thank you for taking my question. First question on BALIC. So we see the growth has obviously come off significantly in this quarter, and the mix has also changed. So what I wanted to get a sense of is, and in the last few years, we've grown very rapidly. So wanted to get a sense of, what the growth trajectory in the near term would shape up like. Or should we take this quarter as an aberration with sort of growth returning back to the 20-25% sort of levels? And also then what product mix should we expect on this? And then on the health side, I think there is significant health insurance side. There's significant confusion in terms of what sort of commission payouts and the way commission payouts should happen. While I think GI Council, IDI want commissions to be paid sort of on a yearly basis, and if payments are made, then DAC is not allowed. I think large part of the distribution community is sort of not in favor of this. And so how do you see this progressing? What approach have we taken? And some sort of color around that will be useful. Those would be my two questions. Thanks.
So maybe I'll take the first one on BALIC, and Tapan can step into the health question. So we had indicated very clearly in the Investor Day that while we've had I'd use the word trailblazing growth in the last 7 years, and particularly if you look at the last 3 years, we've been the fastest growing across the sector with a CAGR of 27%. This quarter, while the changes were happening, we purposely took a pause and relooked at our entire product structures. With this change happening, it was obvious that the focus now is on profitability and profitable growth. And given the heft that the company now already has in terms of the size, it would be meaningful numbers. This is something I've kind of indicated in an earlier call as well. In terms of how I see this going ahead, we did have a tough month in November, I think purposely so, after September. And the sector also had a tough month in November, but I think we had a tougher one. Largely because of our agency business, which is 150,000 agents getting retrained, getting reoriented to these kind of products. And of course, the fact that there was a surrender value impact on commissions, the sector did, on the agency side particularly, had a impact all through. Good news is that December we are back to a slight mild growth. January also we are in broadly in sync with our cohort of companies that we compare ourselves with. Agency, though, is still going to take some more time to settle in the new product mix and may take a few quarters before it starts back to its earlier growth trajectory. Bank assurance and the PSF are largely getting back, but mostly in sync with the rest of the sector. I hope that answers your question. I'm not going to give any clear numbers because, as Srini made it clear, we do not make any forward-looking statements.
And just on the VNB, so margins have improved sharply in this quarter. I'm guessing obviously because protection growth has been very strong. Now, hello?
Yes.
Carry on, please.
Yeah. And any sense of, how what sort of a VNB growth target over the next 3 years that could also be helpful, or how much improvement could we see in VNB margins?
Yeah. See, fundamentally, we've started looking at VNB and not necessarily VNB margins, because VNB margins have some noise from the group credit life business particularly.
Right.
So when we are looking at VNB, you will see two things happening. One, of course, margin itself will start growing faster than what we see in terms of growth. Rather, VNB would start growing faster than what you see in top line growth, because that is the way we had planned our product structures, and not just the mix, mind you, the structures, which is a significant overhaul. And each of the products now, whether it's in the ULIP bucket, in all buckets, are profitable, and each will contribute to margins, which was not the case earlier, which is usually the traditional plans giving more margins, and ULIPs used to be a drag on margins. So that fundamentally that is a big change we brought in, which basically with growth coming in back will result in the trajectory of VNB being higher than the trajectory of growth. On the margins, although we, like I said, it has some noise and I don't really track that as much, but I know a lot of you track. The BALIC is, of course, currently as per planned at a lower margin for the current years. There's been a slight increase in margin versus last year, but you will see us going up higher because of the lower base. So I would rather that we not get any leeway because of the margin growth, but more because of the fact that we are focusing on the VNB growth. That's what we are more interested in.
Got it. Very clear. Thank you.
Sorry to interrupt, Mr. Madhukar. I would request you to repeat.
No, my second question is left here.
Yes, the question regarding BAGIC, can you please repeat it? It was not clear.
Sure. So I wanted to get a sense of how distributor commission payouts are working in this new sort of scenario 1 by N. I believe a lot of the large distributors still want upfront payment, whereas IRDAI and GI Council are not in favor of this, and also it would adversely affect our EOM ratios. So in this context, how do you see the sort of industry moving? And finally, also given that EOM ratios are very high for a large part of the competition, what sort of action, and competition has also received notices from IRDAI on this. So are we seeing any letdown in competitive intensity? Do we sort of foresee that? Any sort of early signs on the health side in particular?
Thank you for the question. So I think in your question lies the answer. The regulations have been very simplified, be it product regulations, be it commission regulations. Now, the commission regulations stipulates EM, expense of management. Well-run companies who have EM less than 30, which is what they have to be there, I don't think they have any stress in terms of how they look at commission payment. The regulator does not stipulate how you pay commissions. It stipulates that you should be under the EM. Nor does the council stipulate how do you pay commission. So, and your company, I think Bajaj Finserv company, we look at the EM is well below 30. It's one of the well-run companies with an EM well below 30. So I think the question is more relevant to companies who have EM over 30. And that is essential. I think it's a good practice because at the end of the day, what the policyholder gets also has a determination in terms of how your expense management plays out. And Bajaj has been a company, and from inception, we see it's been one of the lowest company in terms of expense ratios which should be there. So from that perspective, I don't think this has any impact on the company. And if I look at the industry also, if I look at overall numbers for businesses, first and foremost, business which is long term is not so significant in the overall business industry. Having said that, even there I don't see much fall in terms of the business falling or the distributor not selling for overall for industry also. So I would think for Bajaj it's positive, and for the industry also I don't see any negative happening overall.
But sir, given that,
I'll just add something to what Tarun said on the life side. I think in the past you have seen as a company we are very, very focused on being profitable while seeking to grow. And there have been many instances. Even in 2018-19, I think we took a call to bring down ULIP from 70% to 40% in order to stabilize our profitability and margins. In the same way, you will find in Bajaj also quarter on quarter, year on year, there have been many changes that we make as we see the market economics develop. So clearly, the actions that life company is taking, Tarun and team are taking, are predominantly to weed out those segments of business which are not likely to give us profit. At the same time, focusing also on rebuilding the right product mix, a more sustainable product mix. We believe in the long run, the life business is all about balance. Balance across distribution, between channels, balance across products in terms of risk between par, non-par savings, term and ULIP, and balance between profitability and growth. That will give us a longer roadway of consistent performance. So I think as a general message, I'm saying this because this question will keep coming up, because there is a temporary headwind because of the surrender regulations. And of course, at the current time, there are also cyclical headwinds in the form of lower disbursement. So aggregate margins may not reflect the actions that the company is taking. So the next few quarters, you will see this evolve into hopefully a leaner, fitter, meaner BALIC. And that is the direction that the company we think will take.
Sure, sir. So just, on the health insurance question, sir, my question was more with respect to sort of competitive intensity, because a lot of the smaller players are running at EOM levels which are above sort of 30-35%, for private and SAHIs. So in this context, paying upfront commission further increases those ratios. And loss ratios have also remained quite elevated on the health side. In that context, do we see some sort of corrective action in terms of pricing or some competitive intensity let down? Any early signs of that, or your thoughts on that, if you would expect anything like that? Plus now, senior citizens pricing is also capped. So if as your sort of population ages, those cohorts age, you will not be able to increase pricing beyond sort of 60 years of age, beyond sort of 10%. So does that mean that pricing for the at an entry level also increases? Yeah, so on the health context, some sort of understanding and clarity over here, I'd appreciate.
Yeah. So again, I think the question is a broad question for the industry. It is not specific to the company. As I said, for Bajaj Allianz General Insurance Company, it is positive. Whatever you have said, because this company operates well below the EM limit of 30. So it has so obviously this doesn't have an impact here. For smaller companies, if they are over 35, they have to correct themselves at 30. They have to have a clear glide path and they have to deliver on that basis. The regulator is very clear on that. So obviously they have to decide a strategy. I can't speak for them. In terms of senior citizen cap at 10% movement, it is that any increase in price should not be above 10%. And if you look at the overall portfolio, what percentage is senior citizen? What percentage is the normal increase in price that should happen? And you spread it across the entire cohort. And then you, in that circle, you should also read the other part. The regulator clearly says that the industry should come forward with an agreement with hospitals in terms of standardized rates and procedures. That will also have impact on the overall loss ratio. When you put all this thing together, I don't think there's any apprehension in terms of business. I think it is good for the industry. And industry will come together to deliver on those parameters and bring it together. So I don't think it's something which is so off the mark, which is going to have an impact on industry in terms of getting negative or not going in the right direction. All of what you see and hear is moving in the right direction. And 30% EM is a good limit to have. I think in industries and companies above that will have to correct themselves and bring to that. And that companies are operating in that for like ever. I don't remember if I look at Bajaj Generation Company, even when we were at the early stage, that we would have had an EM which would have crossed these kind of limits. So it's how you run a company, how disciplined you are, which really matters. So but if you look at it from a skeptic perspective, it looks a bit odd. But look at the overall picture, it's a very good thing for the industry. I don't think there's any negative in this.
Awesome. Thank you. Thank you.
Thank you. The next question is from the line of Nischint from Kotak Institutional Equities. Please go ahead.
Hi. Thanks for taking my question. And
And that is what the industry has been asking for. That there is a three-pronged approach on health. One is the premium, other is the tax, which is GST, and third is the outgo in terms of hospital charges which is happening. Now, hospitals are not regulated, and GST industry has been asking for no reduction in GST. So the entire onus comes on industry then to take care of the whole portfolio and do the societal need of serving the society and putting it together. No, because others too the industry is demanding. Hopefully, they should at some point of time be considered. Now, if it is on the industry, then the industry has no option but then to, on its own methodology, it generates, I think, to the hospital income of close to 1 lakh crore is what the industry is paying. Then it is necessary the industry comes together and at least does some correction on that basis to be able to deliver to society the requirement of a good health cover for the citizens of India. So from that perspective, there's no other option but for the industry to come together and do this. No?
Got it. Thank you very much and all the best.
Thank you. The next question is from the line of Shubhranshu Mishra from Phillip Capital. Please go ahead.
Hi, just two questions. The first one is, we have a business line in health. How's the health card that we have? How's that progressing? If one can speak on the MAU and DAU for the health app. Second is, any management transition we are expecting in the fourth quarter? Any move from Bajaj Finance senior management personnel to Bajaj Finserv? Thanks.
I'll take the second question first. Immediately we are not looking at it. I think Rajiv has put in a very clear message. But as a general rule, we do have across the group a very strong platform for nurturing and developing talent. And we do have about 200 people across the group of the top 3-4 levels whom we constantly monitor. We have talent cards for each of them. We map all our positions, the current ones and the ones coming out of LRS. And in the process, people are identified and prepared to take on new roles. And if you see the transitions that have happened in the last few years on the finance side, for example, I'm just giving an example. Vipin Bansal, who was with BFL, moved as CFO of Life. Raman, who was in Life, moved to General, and now he's moving into Bajaj Finserv. I think this, over time, you will see more of these. This is the way we build the businesses, and we believe that as we go forward with the confluence of data, technology, and regulation, we would find that people need to be, the lines between different areas of financial services are graying, and therefore we would want people with multiple business experiences to be able to take on the challenges of the future. So over the next 5-7 years, you will see this play out a bit more. So we become a more agile organization with a very strong core team of people across all our businesses, whether it is the investing business, whether it's the lending business, whether it's the protection business, or whether it's our platform businesses. I'll now hand over to Devang for the question on Bajaj Finserv Health app.
I think there are two, your question was twofold. Number one, we have around 180,000 transacting users coming every month on app and around 450,000 transacting users coming on our web assets. Now, why web assets is significantly higher? Because where we have staged our business, we are our primary go-to market is to be app in app within insurer's app for seamless product experience, because we power not IPD benefit for all insurance, but we power a lot of OPD benefit for insurers, and hence numbers are significantly larger on web, which gets manifested as app in app, which is counted as web traffic on PWA framework. So those are slightly technical details. So to answer your point, that number is 171,000 per month in app and 450,000 per month on web. What we are more focused on is how many health transactions we are transacting, because equally important is to deliver health experience digitally, where I have given you the numbers. Around 550 odd thousand per month is the number, 600,000 is the number per month. Last quarter we have done around 22 lakh transactions. So I think that's where our main focus for future growth is, and we would want to move as many as possible on our digital assets, and we would be outlier in the industry to be able to do transactions digitally. When I am saying digitally, the consumer contacts us before contacting the provider or hospital or laboratory touch point is what our digital transaction numbers are all about. I hope I have answered your question.
Understood. Thanks. If I can just squeeze in one last question. So the answer to the first question is a yes, that Rajiv would make a move to Bajaj Finserv in the near term.
So as of now, we have not taken a decision, and Rajiv will continue with the FL. He has given a 15-month roadmap. Out of the 12 months are over. We will see that as time goes by.
Sure. Thanks.
Thank you. The next question is from the line of Nidesh Jain from